Hello, welcome to CATEX-TV. This is a broadcast from Princeton, New Jersey. Today is Wednesday, the 8th of June, 2011. As you may know, if you're a frequent viewer of this program, we're experimenting with various formats. You'll note that we're no longer accessible directly from our web page. You have to click through our web page to get to our site on YouTube. We're going to continue with that. We're also experimenting with the set design. Today, for example, we're speaking to you from the top of the RCA building. Actually, it's the General Electric building at Rockefeller Center in Manhattan. That's the backdrop behind me. A little bit of a programming note. We're in contact with Sean McGovern, the General Counsel at Lloyd's and the Director of Lloyd's North America, and he has consented to be interviewed sometime next week by us. We're going to talk to him about Lloyd's decision to put their Florida collateralization application into abeyance while they work on their New York application for the same thing. Mr. McGovern has been interviewed by us before and is generally a very forthright commentator, and I'm sure we'll get the straight answer from him as to exactly what Lloyd's is doing there. We'll go to our main news. As could be expected, with the prices of reinsurance dropping, insurance-linked securities, which existed in order to provide an alternative to reinsurance premiums, have begun to hit a rocky patch. This is the first time in a while. For example, the Massachusetts State Wind Pool rejected the insurance-linked securities market in favor of competitive pricing. This is being reported by Trading Risk Magazine, which is a sister publication of the Insurance Insider. These guys generally are way out in front in finding the news. The Massachusetts Property Insurance Underwriting Association was expected to renew its single-state wind bond, something called Shore Re, for the 2011 hurricane season, but they didn't. They preferred traditional reinsurance markets. Corey Anger, the managing director of Global International Insurance-Linked Securities at Guy Carpenter, said that given the capacity and pricing conditions for traditional reinsurance, Massachusetts elected to renew its risk transfer protection in traditional reinsurance form. The Massachusetts group has $96 million of wind protection from its Shore Re 2010-2011 notes. That's going to linger until 2013. About $3.5 billion of cat bonds will have rolled off risk by the end of this month. This is as a result of the 2008 bumper year. The ILS market has been very quiet around the June 1 renewals. ILS investors have only seen about $1.7 billion of new issuance so far this year. It's unclear where the ILS spreads are. U.S. traditional property cat seems to have increased about 10 to 15% by June 1, according to market consensus. But there are suggestions that the lack of diversifying bonds has hampered cat bond investors' ability to take on more American risk. Potential sponsors that are believed to have delayed renewal of existing insurance-linked securities include the California Earthquake Authority and, this is no surprise, the Japanese insurer Zengyoren. Their bond renewal was delayed following a total loss from the Japanese March 11th earthquake. A little bit more information on this. Hanover Re, which was the sponsor of the FAC Pool Re portfolio, which was put together in 2008 by Aon Benfield with great fanfare, has confirmed that it's not going to renew its $150 million Cat Pool Re ILS portfolio due to current market conditions. In a statement, Hanover Re said, in view of the stage in the market and prospective outlook in respect of 2011 for the FAC market, we've decided not to renew FAC Pool Re at this stage. The FAC Pool Re ILS transaction was put together in September of 2009 to transfer a portfolio of facultative risk to the capital markets. The underlying contracts were mediated by Aon Benfield, written by Hanover Re, and placed into the capital markets in cooperation with Espiritu Santo Investment Bank and Execution Noble. At the time of its launch, Hanover told Inside Facts sister publication Trading Risk that Hanover Re expected to cede about 60 FAC multinational property risks to the capital markets. It's unknown whether or not they ever reach that level. but they're pulling back on that too. Yesterday in the United States, in the central part of the country, there was an earthquake. It rattled the St. Louis, Missouri area. Quake hit at about 3:10 a.m. yesterday morning. It was a 3.9 on the Richter scale. Apparently the closest city to the epicenter was a little town called Richwoods, which was about 6 miles away from the quake. It apparently occurred in what's called the Ozark Dome region, outside the New Madrid Fault. Also this morning, there was a 5.4 earthquake to the west of Mexico, sort of just off the Guatemalan-Mexican coast. No reports of any injuries or damage yet, or a tsunami warning. Last night at the White House, German Chancellor Angela Merkel appeared at a state dinner. It was a very glittering affair. The President of the United States, Obama, went out of his way to be extremely friendly with the Chancellor. There was a lot of embracing, friendliness, chumminess, according to the Washington Post. And after a very, very careful perusal of the guest list at the dinner last night, this correspondent was unable to find even one figure from the reinsurance industry. The German finance minister was there. The head of the Bundestag was there. A number of important Bundestag members were there. There was even a German football player present. But there was no sign whatsoever of anybody from the German reinsurance industry or the American reinsurance industry that does business with the German reinsurance industry. There was not even the presence of Frank Nutter, who's the president of the Reinsurance Association of America. That's unfortunate. That's a big business, and it's a bond that should be cultivated and noted at public events like this. That's the news for today. If we have any breaking news, we'll come back and tell you. In the meantime, thank you for watching, and we will see you tomorrow.